How do you do, ladies and gentlemen? Thanks to those of you adding questions and comments. I think I've answered the question about where I get my 10% plus return on capital invested. And then there are the comments about Bitcoin and the future of technology. All great fun. Last week I decided that Bitcoin was likely to be a better long-term store of wealth than gold, but perhaps the more interesting aspect of Bitcoin is the way it works and the industry it spawned. I mean, of course, blockchain. Let's have a closer look at what blockchains have in store for us. Let's first define what a blockchain is, and then look at a couple of examples of blockchains at work. We can then extrapolate from that to where the development of more blockchains is likely to take us, and then maybe we could have a look at some investment possibilities. There is a major misconception about all things blockchain. Many people have an old-fashioned way of looking at blockchain technology. They're not keen on Bitcoin because it's a series of zeros and ones. As you can't touch it or see it, heck, is it really there? My answer to that point of view is that the world is going digital. If you don't get the digital thing, then that's just too bad. It's here, and it's here to stay. I used to be a singer in a band back in the 80s. We gigged, made records, played with other bands, had a great time at the record company's expense, but never actually made the big time. However, just for a moment, think about the recording business. 100 years ago, there was a great move forward from discs shaped like jam jars to flat discs, which meant you didn't have to stand by the machine and catch the playhead as it fell off the end of the record. Yes, my cousin and I bought one of those early machines at an auction way back in the distant past. I wish I still had it. The discs were great as well and came in lovely coloured tubes. We then progressed from shellac to vinyl and eventually to CDs. Then something odd happened. The business went digital. Not only was surface noise eliminated, but so was degradation. But something else happened which epitomised the new age. The record ceased to be necessary. From now on, all you had to do was buy a digital code and use that to download the recordings to your personal collection. The new way of doing things was, in my humble opinion, a great step forward. It cut out the need for a company to create the discs, using valuable resources. It also cut out the need for a product to be manufactured, then transported to the local shop. I no longer needed to catch a bus into town to buy the wretched thing, and I didn't have to put up shelves to stack my records, and I didn't even need a record player. All I have now is a set of zeros and ones on my computer and backup disk. I can't see the record, can't touch it, or turn it over to look at the other side, but the important thing is I can hear the sounds. If the non-tangible aspect of Bitcoin bothers you, think of it in the same way as a download. What's important about a record is that you can hear what's on it, not that you can see and touch it. What's important about Bitcoin is that it's accepted as a store of wealth, and you can use it to buy and sell things. If you consider the rest of your money, by which I mean cash, either in your pocket or in the bank, do remember that 97% of all issued money these days is digital. If you are granted a loan from the bank, your account is credited with a bunch of zeros and ones. They tell you what you can spend. As you use the money, it gets pushed around and your debt increases. As you pay back the loan, your debt decreases and the money you originally borrowed is withdrawn from circulation. Modern banking doesn't work the way banking used to. Once upon a time, one of my Uncle Johns, that's Sir John Templeton, asked me a question. What do you think is the most expensive part of banking? I hazarded the guess that it was the maintenance of all those buildings. Apparently that was the wrong answer. The correct answer was that the big expense was in shifting physical cash from one place to another as it was used in the ordinary commerce of the land. The second biggest expense was in maintaining all those buildings. Fast forward to the digital age and there is no cost to shifting money about when it involves zeros and ones. And there is hardly any use in the buildings either. And within the next 2 to 5 years, 99% of our money will be digital. In the modern world, there is no need to visit your bank. Sadly, I live in Portugal, where I have to visit the bank at least once every month because they haven't caught up with the modern world of banking. However you look at it, we now live in a digital age, and being digital means we can do without rather a lot of infrastructure, which will cut down our carbon emissions, and we can take disintermediation to the next level. That means we can cut out a lot of the people who get in the way of transactions. I should be able to pay my electricity bill in seconds with one digital transaction. Instead, I have to transfer money from my main bank account to my local bank, which costs £25 as it's an international transfer and can take 3 days. To allow this, I need 2 bank accounts instead of one, and the Portuguese one charges me €8 a month to maintain that account. The transactions cost me roughly the same amount as the original bill itself, and various entities and persons are involved. It's sheer madness. Blockchain technology can bypass all that nonsense. Okay, time we explained exactly what is going on with a blockchain. Basically, it is a distributed network of transactions, rather like a giant Excel spreadsheet spread across the internet. In other words, this entity has a structure that can be filled with transactional details. Anyone who is logged on can enter details, and those details can then be seen and added to or acted upon by the person who has received those details. In other words, communication is much the same as sending files across the internet. The blockchain contains cells, much like a spreadsheet, and whatever is entered into those cells is automatically shared with other computers that form nodes on the network. In other words, once again, the system is similar to the internet in that we are connected to each other via various ISPs and routers, which allow data to be sent across that network. I do not propose to go into the minute details of how it all works, but an essential ingredient is that any blockchain transaction is not accepted onto the permanent record until it is verified by at least 6 nodes on the network. That means there is more than one record of any transaction, and once a block of information is filled, then the block is shunted onto a chain in the network. The block is entered into the chain. Hence, we have a blockchain, which is an immutable record of the transaction. How one uses this system depends on what the blockchain has been set up to do. Bitcoin runs on a blockchain. That means that when someone buys Bitcoin from someone else, those transactional details are embedded in the spreadsheet, and eventually those details are verified by enough nodes on the network to allow the transaction into the current block. And when that block is filled, it becomes part of the chain. This is why most blockchain transactions can take up to 10 minutes to be verified. There is, of course, a way round this time lag called Lightning, but once again, this is not the place for me to explain all the minutiae of transactions. This is merely meant to be an overview. Next, it is probably a good idea to give you a couple of examples of blockchains and show how they work and how they are an immense improvement on how things are done nowadays with this new technology. However, that will take some time, so it's probably a good idea to stop here and go through those examples next week. Okay, folks, until then, please like the program and see you next week.